GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's more reliable than that hot tip your friend swore by. I'm your host, Jay Hamilton. It's Monday, February 24th, and today's episode is all about what is going on in institutional crypto buying. Institutional markets are opaque, they're not as clear to retail investors, and it's difficult to understand what institutions are doing because they don't buy crypto the same way that retail investors do. And so we've brought on Robert Valdes-Rodriguez, CCO of Keyrock, one of the leading OTC trading desks, market makers, and liquidity providers in this space, to give us an idea of what is happening with institutional flows right now. Because if you understand what the whales and what the smart money are doing, you can often get a tremendous edge in your investments. As I mentioned, Keyrock is a leading global liquidity provider, market maker, algorithmic, and OTC trading firm. They've been around for 7 years, been a leader in the space for a long time. They process over 500,000 trades every day across 85 different exchanges with some of the biggest institutions in the world. So nobody sees this the way they do. Before we jump in, do me a favor, guys and gals, please subscribe to the show wherever you are listening. Follow us on podcasts, on YouTube. It makes such a difference and helps us get bigger and better guests just like Robert today. Today's episode is brought to you by crypto.com cards. Check them out. One of the best cards to spend your on-chain dollars. Without further ado, Robert, welcome to the Milk Road Show.
Well, thank you very much. It's really great to be here. So thanks for having me, and look forward to the discussion.
Likewise. Yeah, fantastic to have you. Okay, so obviously, institutional trading is a little bit, a lot of the institutional trading happens behind the scenes. It doesn't happen the same way that regular investors, daily retail investors trade in crypto. And that's what today's episode is all about, is picking your brain to get an understanding of what the institutions are doing, what the major milestones and events are that happened this past year. Before we jump into that, though, can you just explain what Keyrock does as if you were explaining it to a fourth grader in the simplest terms possible?
Sure, of course. So the first thing that we kind of look at when we think about what Keyrock does in the markets is we think that liquidity is the lifeblood of all markets and all asset classes. When there is sufficient liquidity in the markets, participants, institutional investors, and retail investors are able to do what they want to do in the market. And when liquidity tends to dry up because of either some sort of crisis or some other event in the market, when liquidity dries up, no one can do what they want to do, and it creates a level of crisis in the market. So what we do at Keyrock is we spend basically all of our resources and energy in developing algorithmic trading models to make sure that we're able to provide liquidity provisioning across all markets, across all geographies, and across all tokens. And we do that as a service for all of our clients, which is a huge differentiator. We're not a prop team or a prop desk. We're doing that as a service to the market, to some of the largest foundations and projects in the market, but we're also doing that as a liquidity provider to some of the largest institutional investors on the planet globally.
Okay, fantastic. Okay, so today I really want to focus on the OTC trading desk part of your business, because that's where the OTC is where the biggest institutions, the biggest whales, that's where they make their trades. When Michael Saylor, for example, when he buys, 2 billion or $1 billion of Bitcoin, he's not logging into his Binance account and spot buying $1 billion. So let's just start by explaining. Let's say Michael Saylor or an institution wanted to do $1 billion trade. They wanted to buy $1 billion of BTC, let's say. How does that happen? How does that work?
So there's usually a bilateral relationship between a institutional investor and Keyrock, where we will be transacting on a daily, day-to-day basis. We're giving them commentary about what's going on in the market. They might be just coming to us and say, Robert, Keyrock, we have a big piece of business to do today, and how do you recommend we transact that? And given our experience in the market, based on the institutional investors, our counterparties, urgency in the market, we'll make recommendations about what the best way to execute this transaction. We'll look at what's going on in volatility in the market. We'll look at how much liquidity is being traded on the day, and we'll recommend a way to go. So it might be that the market is kind of quiet, and we think that this particular institutional investor may want to pick a limit like level where he wants to actually do all of these purchases in the market. And we'll say, okay, you know what, market's not super volatile right now. Let's pick a limit. Let's let the market come to us. And if the market starts moving away from the client's limit of where they want to execute, we can then update the limit, right? So that's one way of doing it, just doing things on a limit order basis with the entity. And it could take, depending on the size and the activity, it could take a day, sometimes a couple of days to execute something if the counterparty really stuck on a specific price that they want to do it at, right? And you're subject to where the market is and letting the market come to you. Then there's many other types of strategies, but one very common, probably the most common strategy is to implement what we call a TWAP order strategy. We use our algorithmic models, and a TWAP really stands for time weighted average price, right? So what we do is we'll work with a big institution. We'll say, okay, we're going to cut this big order that you have to do. Let's say it's $1 billion. We're going to cut that into a bunch of different orders, and we're going to execute this for you on a time-weighted average price basis. That could take several days to do $1 billion order. Depending on the market, it might take 3 or 4 days. If it's a $200 million order, it can do it in an hour. So it all depends on the volatility and the activity. But then we as a firm, which we do, it kind of a little bit differentiates ourselves. So we give a report back to our institutional investors, say, this is exactly what traded in the market during this period. This is how we traded it in the market for you. And we'll give a report, hopefully showing that we beat what the market was doing from an execution perspective. But if we didn't, because of volatility, it's all about transparency, so that the institutional investor can really feel that they can trust how we executed in the market. So those are the two main ways that you can execute for an institutional investor, and there are others, more sophisticated algorithmic types of strategies that you can undertake as well.
But the takeaway, I think, for today's episode and for our listeners is when an institution wants to do a big buy, $1 billion, several $100 million, they're calling up a provider like yourself, like Keyrock, and they're saying, hey, help me come up with a plan in order to execute this where I get the pricing that I want. So I'm not necessarily doing a buy all at once, although you did say that sometimes the market can come to you and you can do a limit order on that. But you are advising them in how to do this in order to get the pricing they want. And then also probably not to attract too much attention, because some of these institutions don't want the whole market to see, oh my gosh, a massive $1 billion buy just happened. If it's Michael Saylor, he wants everyone to know, and that's fine. But there's an aspect of sometimes doing this in a way that doesn't lead a certain token price to have a big green candle, because you all of a sudden suck a lot of liquidity out. So there's a lot of strategies around the way this is done, obviously.
100%.
Okay.
Really, I couldn't agree with you more on that point. In fact, 99% of all institutional investors would love to be able to execute $1 billion without any ripple in the market at all. And that kind of is really the job of ourselves, the liquidity provider in the market. Our expertise in the market is able to do it without anyone knowing that anything even happened in the market. So couldn't agree with you more.
Right. Amazing. It's incredible that you do that. Shout out. It's I'm very impressed that you were able to pull that off. Okay, so let's talk about some trends now. You are working with these institutions. You're doing these big trades. You're helping them do big buys. I think there's two main trends that I want to talk about. One I want to talk about is what happened in 2024. Like, let's look back over the last year and understand, was there a big is there what are the growth trends in OTC trading right now that you can see? Because from my outside point of view, I think that there is tremendous growth happening in institutions buying, but it's tough to see that because we don't exactly know. There's a lot of speculation that a lot of institutions are buying and a lot of governments are buying, but is that actually happening? So what are the trends that you're seeing right now?
So I would say that the very first trend we saw in 2024, March 2024, was leading up to the BlackRock ETF. And to me, that was really the biggest, I would say, buying price pressure that we saw from everyone. It wasn't just institutions; it was the whole market getting ready and preparing for this potential ETF launch. And I think we saw over 30%, 40% increase in pricing. We saw ourselves as a firm saw a ton of buying from all types of players. It was very, very widespread. We did not see deep institutional players coming in yet. We didn't see any like brokers, registered investment advisors. That was all, I would say, very tame. And most of it was, I would say mostly retail-ish type of players, some institutional players that were crypto native jumping in as well. So that, I would say, led the majority of the flows that we saw for the first part of the year leading up to the 100,000 in Bitcoin. And the Bitcoin dominance versus the rest of the crypto market really led the way. So that was, I would say, the major trend. It's pretty stable, I would say, throughout the rest of the year until we started getting closer to the elections. And then we saw the same level of buying right after the elections, except we did see pronounced institutional buying in the last quarter of 2024.
Very interesting. And when you look year over year, Keyrock's been operating for 7 years, I believe. Correct me if I'm wrong on that. Are you seeing orders of magnitude increase year over year in institutional buying of crypto?
Absolutely. I would say that at least for the Keyrock, from a Keyrock perspective, this year over last year, we saw, so 2024 over the year before, and certainly this year, exponentially increases, like 2-3x the amounts of volumes that we've seen in the past. So to me, it's a real, and then after the elections, it just increased even more. I just read an article that 13B filings came out at the end of last quarter, and showing how many new institutional investors were adding crypto to their portfolios.
Mm-hmm.
These are like names like the State Pension Fund of Wisconsin, the Abu Dhabi Sovereign Fund. I mean, we're talking like real like big institutional players have been adding crypto. Most of it has been through IBIT and through other ETFs, because that's the easiest way for them to get exposure. But the amount of new types of institutional global investors that have been adding crypto, specifically Bitcoin, to their portfolios has been amazing. And I think
And
it's just going to continue.
that's, I was going to say, how do you think about the future and the rest of this year and beyond?
Well, even if you look at like a TradFi CME futures open interest in Bitcoin futures, I think in the first quarter of 2024, when the big move up, there was like $11 billion of open interest in the Bitcoin contract, and now it's like double that amount, right, of open interest. So, and that the largest players in that market are all large institutional investors, TradFi investors that are in there. So, to me, it's just the beginning. You're going to start seeing more and more of these types of real institutional investors enter the market. But in addition to that, what we haven't seen yet, what I think is going to start happening, some of the registered investment advisors, the ones who weren't really allowed to offer this to their clients, that's coming. And once that starts coming, that's going to drive more retail, because retail has been absent from this whole move, actually. And once the RIAs start coming into the market, and being able to offer this to their retail clients, you're going to see another bump up. That's going to be retail driven, and that could be pretty explosive.
Yeah, it's hard to it's hard to separate all of the noise, and RIAs is a great point, because I think to us, to a lot of the people that are in crypto every day, we assume that, oh, every investor has access to this, right? And yeah, you can go buy it. Now, of course, every investor technically has access to it. You could go, download a wallet and get a ledger and set up, but 99% of people are just not going to do that. They don't want the self-custody risk, and they don't have the tech wherewithal to understand that. So they need to buy it through more TradFi rails. And I think that we all forget that so many people invest through the big banks, right? They invest through their RIA, and a lot of these big banks, Goldman Sachs, JP Morgan, they're not allowed, the RIAs aren't allowed to advise their clients on buying Bitcoin, even Bitcoin, let alone other tokens yet, because it's considered such a high risk asset. It has to go through all these processes and procedures. So it is like these massive flows, just these pipelines aren't even open yet. And obviously Trump being in and the SEC changes, like all these things are tailwinds that will lead to the changes necessary. But I don't remember who was talking to. It might have been James Seyfarth from Bloomberg, was saying that for a lot of these, like for JP Morgan, Goldman Sachs, for some of these larger banks to be able to allow their RIAs to recommend these type of assets to their clients, it's still like we're still like 6 to 12 months away from that. Like we're not even there yet.
You're 100% right. And I hear that from everyone, whether it's TradFi friends or whether it's people who are in the market. They might be in crypto, but they have a legacy, personal account with this RIA, and they're like, and they don't even let me do crypto yet. So it's coming. And when it does, it'll start a whole new wave. But one of the other areas that I think you touched on, and I think is important, is the regulatory landscape in the United States. And I think you're going to start seeing, we already are seeing, we've had more dialogues with real large institutional investors in the last 3 months than we've ever had, ever in the history of Keyrock. And it's some of the biggest names you've ever heard in the market. They're not only just starting to get access to their portfolios through ETFs, et cetera, but they're thinking about planning for self-custody. Who are they going to use? They're going to start owning these tokens outright. It's not just Bitcoin. It's not just Ethereum. They are moving into crypto, and it's super exciting. And I think that a lot of it's led by, hopefully this new regulatory environment that we see in the United States.
That's amazing. It's so exciting to hear. And I want to dive deeper into which tokens you're seeing these institutions buy. But before we do, just to wrap up the regulatory conversation, when you project out, do you think that we're on a linear scale up with institutional flows coming into crypto, or is there any major events or milestones that we still need to get through before we see the big push up?
I think it's going to be linear until we get some clarity as far as where exactly we're going to go with regulation, without getting too deep into a tangent. Like I think stablecoin regulation is going to be massive. It's going to drive not just big institutional investors, but it's going to drive types of organizations that may not have had access necessarily to crypto, to stable coins, and a way for facilitating payments around the globe. It'll be a very important part of it, right? That's going to drive, of course, investments of institutional investors investing in Bitcoin and others. But that type of regulatory framework, when that becomes clear, that will be the catalyst for a big move higher. Until then, it'll be linear. Until the catalyst, if we get something regulatory clarity out of the United States, which we haven't got yet. All we have right now is a desire to become more clear. Once we get that, I think it'll be exponential again. It'll be the next wave.
So Trump launching a meme coin wasn't sufficient regulatory clarity for everybody.
That's a good one.
Okay, let's chat about what are institutions buying? Because you said it yourself, and this is super interesting. They're not just buying Bitcoin and Ethereum, which would be the two ETFs that are available to them buy. And I think that most people who do not actively work in the institutional space of crypto just assume that I think most people assume it's just Bitcoin, not even Ethereum. Can you talk to us about what they are buying?
So sure. So what we're seeing is of course the majority, especially the first institutional entrants, it's Bitcoin, and especially because Bitcoin, the dominance that Bitcoin has had over the rest of the crypto landscape from a market pricing perspective has dominated. That's always been, I would say, the first token of institutional investors. And it's the easiest to get by any type of investment committee that is thinking about getting into crypto. It's the one that's been really without any legislation against it. But when you're having other types of hedge funds or venture funds that are dipping their toes, they're interested in the projects that are going on there. They're investing in actual projects, which means that they're investing in other tokens other than Bitcoin. So if you were to ask me, okay, how do you see the breakdown? Still the majority is, I would say 70% Bitcoin, ETH, with, I would say, some of the other second generation or first generation alts, probably about, the rest of the 27%, 28%, with very, very I would say very crypto native, almost degens are like doing like 2% into the memes. But other than that, and the reason, and that's one of the things that surprised me the most, is how much activity that we've seen in meme coins.
So they are buying meme coins.
No,
Like I've heard this.
I don't think institutional investors necessarily are buying so much, but because we have seen some activity in institutional investors buying meme coins, but mainly, and that what that points to is the success of ETH and Solana. The fact that those have had such a strong community that there's some types of memes that institutional investors have been okay to dabble with, more as a speculative than anything else.
Yeah, what has really surprised me from reading some reports about OCC's trading trends in the last year was the amount of meme coin buying that was happening. And let's be clear, I'm surprised that any meme coin buying is happening by institutions, right? So look, I think we're not talking about that being, as you said, it's still a very small percentage of what is happening, but the fact that they're at all interested in it, that they're open to it. And I also don't like, there's no way that the institution, they're not buying, my understanding at least, and you correct me if I'm wrong, they're not buying the newest meme coins, and they're buying the blue chip meme coins that have been around for a while, that have strong market caps, that have trading history, and that you can look at charts, and that they sit there and they say, hey, look, yeah, let's speculate on some of this because there's a genuine belief that there's opportunity for some big returns.
Yep. And again, I don't think it's any of the major like pension funds or anything like that, but there's
Mhm.
the other institutional hedge fund types that have been dabbling in very small amounts. Though that was my biggest surprise too, as well. That we saw as much demand as there was.
Incredible, incredible. And then what about between? So okay, so Bitcoin takes up the most of it. Between like Ethereum, Solana, like the other major tokens, right?
Yeah.
Is there any concentration happening there?
Yeah, I would listen. Even though Solana and ETH gets a terrible bad name because it was terrible performance this year, and it's just been like dragging them, dragging the market, and a lot of hype around Solana, but still, and others. But to me, between ETH and Solana, they still gather the majority of all the non-Bitcoin institutional flows for sure.
Mhm. Okay. Okay, great. When you look at the market right now, one thing that we've been talking a lot about on the show is this divergence between retail sentiment, which is so low right now, and there's so much fear in the market. And a lot of that is a result of a lot of people going too far down the risk curve and buying Trump token or Milena or Libra, or pick your new meme coin that launched and then unfortunately does not turn out very well. But then at the same time, we had Bitwise on the show last week, and they talked about how on the institutional side, they've never seen such bullish and optimistic views. What are you seeing on the institutional side in terms of the sentiment right now and where we are in this current market?
On the institutional side, I've never seen it more positive. I've never
Really?
seen, like I said before, we've never had as many conversations as we had with some of the biggest institutional investors about either adding crypto to their investments or increasing it. And I would say one of the areas within OTC that's actually been absent over many of the years in the beginning that I think is expanding is derivatives. So we're seeing a lot of institutions are saying, okay, well, all right, I'm long I'm long this token, or I'm long this position. What can I do with it? How can I hedge it? How can I do some covered calls on it? What do you think? And they're engaging us with other types of strategies, specifically in derivatives and perps as well when you're doing the basis trade. But the options part of the business is an area that is really growing significantly, and that. If you imagine if you're running an options desk, right, or not, like we run all of our own Greeks. We don't just like go on Deribit and put a spread on it. We run all of our own Greeks. We manage our own options book. So whenever we do an option, that requires us to do a delta hedge. It requires us to do a gamma hedge, and all of that requires activity in the spot market,
Mhm.
right? So that's going to be increasing, and the more institutions are looking to either hedge their exposures using derivatives and options, or to create some sort of call writing yield using options, that's going to just create a lot more institutional demand for buying it. So those types of conversations are happening with us all the time.
Incredible. It's it really makes me feel this divergence in sentiment is just it's a very we're at a very strange time in the market where you you don't often see this divergence where there is so much bullishness and positivity coming from institutions and really the biggest money. And I think maybe the reason is because they're still coming. They're not even here yet. So I think one thing that's hard to, and I'm sure you can relate to this. I'm guessing that these institutions, they don't see these meme coins that are, these awful stories and this, the rug pulls or the liquidity events. They're not seeing that. They're just sitting there thinking, yeah, crypto looks amazing and everything looks great. So their echo chamber is very different than everybody who's in here who sees a lot of the bad stuff that is happening, and then a lot of the wipeouts that are happening, which is scary, which leads you to be fearful yourself. Is that the case in your seat, that these institutions, they're not asking about this bad stuff, are they?
Very few are really focused on the top tokens that we talked about, right? So that's really not their focus. Their focus is really to create exposure to an asset class that they haven't had exposure to before, that they think has what I would say a huge exponential, upside, right? So how do they access this asset class? And it's more pent up demand than anything else that they've been waiting to do and they haven't been able to. And now it's just becoming a lot more. You can bring up Bitcoin in an investment committee of a major institutional, and you're not going to get fired. You're going to be like, oh yeah, let's discuss this. How do we make this happen? How do we implement the right security and protocols for us to really be able to invest in this asset class? So that's a very different conversation than what was going on 2 years ago.
Mm-hmm. Yeah, incredible. It's just such an exciting time right now. It's the next, with regulation coming, we'll see what happens there and how quickly it happens. Nobody can predict that, but it's very clear that this is a priority for Trump. That the new SEC is clearly heading in the right direction. I think, it's the outcome is going to be truly something that I don't think any of us can fathom. And the timeline, always difficult to predict. I don't have a crystal ball. I don't know exactly how it's going to go, but certainly, it feels like we're headed in a very, very good direction right now.
Yep. Again, I couldn't agree more. And the conversations that we're having with institutional investors, we're just trying to be there for all of them, help them along the way. Once they're ready to act, we want to be able to just help them along the way, really, and advise them.
Well, that's fantastic. We are so grateful to you and the entire Keyrock team for everything that you do and the way that you help the whole market work. Because as you said, liquidity is king, and without liquidity, markets do not function. So we are very grateful for everything that you guys do. Robert, thank you so much for joining us today.
Thank you so much. It really was a pleasure. Really appreciate you having and love to come on anytime. Thank you.
Fantastic. Wonderful. Everybody listening in, let us know how you're feeling right now. You feeling bullish? You feeling bearish? Listening to all the institutions that are coming into the space. How you guys feeling? And also, do me a favor, hit like, hit subscribe wherever you're listening. It does us such a big favor. Once again, thanks for listening in. Have a wicked awesome day, everybody. We'll see you again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.